Hello, everybody. Welcome to our session today. As always, looking forward to being able to get into uh, talking about the markets and what's going on right now, and looking at some of the different elements that we have going on. Uh, Looking at some of the different elements we have going on right now. Give me just a minute here. Okay. I'm going to need to close this down for just a minute, but well, I can't do that. Give me just a minute. Sorry. Move some things around here and okay. So they're not letting me share different windows, which is kind of interesting. Why do I have books in a gun cabinet? That is actually a bookshelf, not a gun cabinet, believe it or not. Uh, at least that's what I was told when I bought it. And it's full of shelves, so I filled it with books. Thanks, Barry. I appreciate that. Give me just a minute here. I'm going to. I'm gonna have to pivot just a little bit here. There we go. Okay. All right. So I apologize. I changed computers and did not try to log into any live streams before to test out the YouTube live stream on this new computer. As a result, I don't have access to all of the sharing capabilities that I normally do. I'll get that fixed for next time. As it is, you're going to see me toggle back and forth a little bit from the some of the different things we're going to be talking about and looking at some of the different stocks that we're going to be going over for our webinar, or excuse me, for our live stream today. It is Friday, as always. That means that we have a lot of different option contracts that are scheduled to expire, including some open positions on my own that I'm going to be reviewing. So we'll be going through those very shortly. I need to get that tab open as well. So give me just a second. Okay. So we'll be going through those as well. For those of you who may be new to Rebel Income, to the live stream, remember to always check the hashtag live webinar channel on the Discord server for the link to this live stream. This will be posted later as well under the hashtag recordings channel, but you'll always find the link for this. Usually, typically, I try to post this as early as possible on Thursday in the hashtag live webinar channel. All right. So let's go ahead and get straight into it. Make sure that I'm sharing this correctly. Oh, these are the this is my track record, so you can see the the different contracts and positions that I'm in right now. Let me zoom this in just a little bit, try to make that a little bit more clear. And so it is the 20th, and I've been stacking up positions for the past few weeks with expiration of today. So we'll be going through these and diving in and seeing where things stand with them. Let's go ahead and start out with Borg Warner. Hopefully, we'll have some time for you as well to post some questions and let us know what you may be interested in looking at as well. One last thing, and by way of housekeeping, really quickly, a couple of different ways that you can get in contact with me directly. The most direct way is through email. And so I'm posting that. I've just posted that in the chat. If you haven't already made a note of that, please do. rebelincomesystem@gmail.com. The other way you can do it is through the Discord server. I pay attention to that throughout the course of the day. Look for comments and questions there. That would be in the. You can either message me directly or use the hashtag open-discussion channel as well. All right. So I mentioned there's several positions that are set for expiry today. The first of those is Borg Warner, so BWA. That was a put sale that I set up on the 20th of November. So this was a 1 month trade, selling the 32.50 strike price, bringing in about 2.31% for that period. Now that's pretty nice, and that is something that that's something that works out pretty well for me. But it does, we've had a month for the market to do its thing. So let's try to see what that changes and where else that takes us. So let's. Okay. BWA. And we can see that this one the stock is very well below the level that we want. Sitting a little bit below $32 as of this writing. So here's current level right now, right about 32. It has been bouncing off of support at around 31, but still well below the 32.50 level. That has some nice pastels going here for my markers. Going a little bit below the 32.50 level that I had sold. So it does look like, as of right now, unless we see a continued impressive rally here, it looks like I'm going to go ahead and take assignment on this. As always, taking an assignment isn't something that I try to avoid. As we know, I embrace the opportunity to go ahead and take those assignments. Okay, just a second. All right. There we go. Sorry, I'm trying to get my annotation controls my annotation tools under control here, and that's it's not working. So that's interesting. Give me just a moment. Okay. So we're sitting right around 31.90, a little bit below the $32 strike price. I apologize for the delays here, folks. So I'm trying to sort out my own problems with this new system. Um, this is a stock that is a little bit below it. I don't try to avoid assignments when they're coming, and so this isn't something that I'm especially afraid of. However, if this is something that you want to uh, think about rolling this particular put sale, maybe you don't want to take the assignment. At least consider the possibility of it. Maybe you think that the downside in the stock is more than what you're willing to accept. Let's take a look at the chart again. We do see that the stock should have some pretty solid support right around its current level. We've got we've got a lot of activity here. Sorry, we've got a lot of activity right here at around $31 from a lot of pivot lows we see in July, August, September, as well as right now. So it does look like it's holding up pretty well. It's if it does break below this, its next low is probably somewhere between 30 and 29.50 based on this pivot low back in February of this year. So we'll see if that holds or not. If it does, then the stock may rally a bit. Assuming I'm assigned today, then that means that it could open up a good opportunity for a covered call next week if it rebounds enough. We'll see. But if you're afraid that maybe there's a little bit more risk right now, then maybe it makes sense to think about whether or not to roll this option. So, uh, really quickly, keeping in mind, I brought in on this 75 cents on this particular put sale. Right now, I could buy it back. It looks like today, again, let me zoom in here. Here's the 32.50 strike, which is a little bit in the money. If I wanted to buy this back, there is a lot of activity in this, but we do have a pretty wide spread between the bid and the ask. So you could try to take a price somewhere between 45 and 70 cents if you wanted. If you didn't want to try to uh, monkey around with the market, wait for it to come to you, you could simply put in a buy to close at 70 cents. Close that out. You would actually still be a little bit profitable if you wanted to close this out, avoid the potential for an assignment, and then move on to the next trade. There'd be nothing wrong with that. And the fact is that you wouldn't actually lose money. So that might be interesting. As things stand, uh, Borg Warner, as I've said multiple times in the past, this is a stock I really like in the automobile components industry, and that specifically serves the broader auto industry from a very interesting niche, being primarily, auto parts, and that's not only serving the major automakers, but also aftermarket, and that's something that I think is very interesting. Have they bought a company with a major footprint in electrical vehicles called Delphi Technologies, and that acquisition, I believe that was in 2022, put them in kind of a leadership position, especially again in the aftermarket area of electrical vehicles. And so, Borg Warner, for a lot of those reasons, is a company that I really like and that I'm not afraid to hold on to, assuming I take an assignment. Which it is interesting right now because we do see that happening a little bit more right now, don't we? Where there are more assignments being taken than normal, um, and you're going to see as we go through some of the rest of these. It looks like I'm going to be on the hook for assignments in a few of these cases today. Does that mean that uh, does that mean I was wrong? Does that mean I'm making a mistake with the way that I'm approaching income generation and put selling? Not necessarily. And feel free to put in your comments here about how you feel about the current market and what conditions are doing to try to make you evaluate the trades that you're placing, because everybody's perspective on this is going to be a little bit different. Um, For me, this really comes down to, as I've already talked about a little bit, how do you feel about the company that you are selling a put option on? This is one of the reasons that you see in every single one of the Tuesday trades that I post. If you read the report that I include with the trade alert, I always say that I'm selling a put option on a stock at a price that I'm comfortable being assigned at, and if the stock is below that price, then I will accept the assignment. If you're In my view, that one of the primary reasons that uh, a lot of people really don't understand the value of put selling is because, and it tends to get misperceived as being a very aggressive strategy, is because they're primarily thinking about it in terms of relatively short term things, and they're not approaching it as I believe, which is as a gateway to stock ownership. I believe that that is the best implementation of put selling, because it's an opportunity to set a price with the strike price that you've sold. In the case of Borg Warner, 32.50, that you're comfortable with buying that stock at. Now, in the very very short term, the criticism is that creates an unlimited amount of downside from the strike price that you set all the way to zero if the stock really really breaks down. And while that's a technical reality, I try to balance that with the fundamental strength of the company that I'm evaluating, what I think their value proposition is, as well as elements like where their trend is sitting. And so those are all things that together, I believe, help to minimize some of that risk. The other thing that I'm doing to try to minimize that risk a little bit is working with very, very short term contracts. That's why you see me almost always staying within 1 month or less, as well as the opportunity to increase my trading frequency. So trying to leverage short-term contracts helps to minimize that a little bit as well. The other element that is really important when you're thinking about these as well, as always, is to think about the uh, the total size of the position that you're working with. And let me go ahead and switch back here to my track record, and we can see for Borg Warner, I sold one contract at 32.50. So I'm on the hook for exactly 100 shares. That creates a total potential obligation of $3,250 out of an account that's a little over $292,000. That's a relatively small amount, and so that becomes a little bit easier to manage and to deal with. Um, a lot of people will also make the mistake of thinking that when you're selling a put option, that the objective here is to maximize income, so sell as many contracts as you possibly have room for. And I strongly advise against that, not because I'm an advisor, but because in my own experience, it's much more effective if you take a patient approach and you actively try to work with very conservative position sizes. The maximum position size that I'm really willing to take in any one trade that I place is about 5%. And lately, I've been very well south of that level, much below, um, usually somewhere around 2 to 3%, and as in many cases, even below that. This is a little bit above. This is for Borg Warner. Um, Let me do the math here really quickly. 3250. This is a little over 1%. So this is a very conservative position overall, and that helps not only to be able to work with more positions at one time in terms of it aids diversification, but it also makes it a little bit easier to think about risk in any one of these positions. If I'm only risking about 1% of my account, it doesn't mean I'm turning a blind eye to downside in the stock, but it does help to keep that a little bit more compartmentalized so that I can think about it objectively as well. Okay. Yeah, Barry, thank you. He makes another really good comment here. Also working with stocks that pay dividends to collect passive income. That's thank you. I can't I can't agree with that more, because that is absolutely another one of the differentiators for me when and for Rebel Income System. With the Rebel Income System is the opportunity to bring in that passive income from dividends. If I'm working with a stock that I intend to hold on for a long time, it makes sense to not only look for appreciation, but an opportunity to bring in that passive income. And when we're talking about a stock like Borg Warner, let's go ahead and scroll down here a little bit. This is one that pays, not a huge dividend, but it's nice enough. It works. 1.4%. And every little bit helps. And so you're right. That's the other element here that I really like to try to pay attention to. So thank you. I appreciate that. That's a great comment. All right. The next one on the list was FMC. So let's go ahead and switch over to that one. This is a stock that I was assigned a little bit earlier. Let's go back to let me look at the track record really quickly. I was assigned this in middle of November at $60. And so we can see that the stock really experienced a pretty sharp decline from that point. I'm missing my annotation tool right now. Not gonna lie. Need to work out the bugs with that one. This we saw a pretty sharp decline from this one, up until the 15th. That was down here where it was down about $54. And then from there, it recovered a little bit, but the last couple of weeks, it's accelerated all over again. It's dropped back down. I was feeling pretty good about this, and up here at the beginning of December, thought that maybe there's going to be an opportunity to get out of that, and that's what set up the covered call in this case. But it's clearly dropped back down below that since then. Now it's at about 50.59. So looks like certainly does look like this covered call is going to expire worthless. I'm going to still hold on to my shares. That's okay. The nice thing about that is the covered call gave me kind of one type of a self-paid dividend, right? That's the other reason that I take these assignments, is not just to bring in the passive income from dividends, but also to be able to generate additional income with covered calls. I had one very quickly with FMC, but here's another nice reason that is coming up, is a dividend at the end of December, and it looks like I'll be in a position to go ahead and collect that at 58 cents per share. And for perspective, that's not too bad. That's a little over 1.5% for one quarter. If my math isn't totally totally wrong. Well, a little over 1%. Let's just call it that. Total dividend yield at the stock's current price is around 5%. So this is a stock, Borg Warner pays kind of a minimal dividend, right? But FMC pays a very attractive dividend. And so this is one where holding on to that position and enjoying that dividend, that's really nice. Yeah. Barry, you're exactly right. That's a better percentage than a Regions savings account, and most bank savings accounts are very, very well below that as well. So yeah, you're exactly right. So this is nice, and that means that these are opportunities to use really good companies as kind of a proxy, as the word I was looking for, a proxy for bond yields. I was listening to a commentator yesterday talking about bond yields and specifically short-term treasuries, which have right now yields that are sitting around 5%. And he was pointing out that for a lot of people, there's a fair amount of money that is not in the market right now because people are afraid of downside. And he's saying, it's hard not to feel that way when you can sit in short-term treasuries and some money market accounts that are paying 5% per year right now. And I totally understand that. At the same time, I am a proponent of trying to take advantage of the appreciation opportunity in the stock market as much as possible. And so even in bearish conditions, that's why I continue to look for high value stocks that are offering really good companies with really useful value propositions. They're already going to be in the middle of very long downward trends like FMC is. We can see this thing's been falling since the beginning of 2023. These are, really good examples of the kinds of stocks that a lot of people are going to stay away from, be afraid of, but that for value investors and for Rebel Income specifically, they work out really, really well. And so in the long term, there's plenty of a price appreciation potential, but you also get this attractive dividend as well. And all of those together create the opportunity that we're trying to get to. All right, so the stock is well below the $60 that I was assigned. Not quite 20%. I just had to try to do the math in my head. Not quite 20% below, and so that is something to think about. But again, this is also one that is a conservative position for me. At $6,000, I only sold the one contract, so I have 100 shares. It's a larger position than Borg Warner, but it's still just a little over 2%. So it's within my overall tolerance right now, and that's okay. All right. Going back to the track record. That was FMC. Now let's talk about Huntsman. This is one, just in the interest of full disclosure. I was assigned Huntsman quite some time ago. I've been holding shares in Huntsman for a while, and we can see here June of 2022. So a little over 2.5 years now, I was assigned $34 per share. And so I've been watching this thing decline pretty steadily since then. That set up the opportunity for the latest put sale at $20. So for me, this was an opportunity not only to highlight what I still believe is a really, really good company with a very interesting value proposition at its current price, but also an opportunity to, for me, lower my average cost basis from 20 down to, or excuse me, from 34 down to, it would be 27, assuming I take an assignment today. Let's go ahead and take a look at the stock again. I sold the $20 strike price, and it's down at 1832. So just like with Borg Warner, unless we see a major rally, which I don't expect, I'm going to be assigned here at 1832, or excuse me, assigned at 20 with the stock a little bit below that. That's going to put my average cost, up here in the $27 range. So up here at the top of the stock's yearly range is where my new average cost is going to be. That's a little bit below, but that's kind of where my charts are right now. So I'm still quite a bit above where the stock's current price is, but that gives me an opportunity to lower my average cost a little bit. And if once the stock does finally recover and begin to rally, sorry, I just realized that I was not sharing my chart. There we go. Stock is significantly below 20 right now, and certainly below the $27 mark that I had been working. That it looks like I'll be moving my cost basis to once I take this assignment. Even so, again, this is just like FMC, a stock that's been in a very long downward trend. This one goes all the way back here to the very early stages of 2022. And so I've been watching it stay in this downward trend and waiting for it to recover. The thing is, at some point, inevitably, markets always do recover. And if as long as the company's fundamentals hold, at some point the market is going to recognize that it is undervaluing the stock that you're looking at, and that's what creates the opportunity with put selling. It's also the reason that if you are accepting assignments like I do, you have to be willing to be patient and play the long game. That's why with a stock like Huntsman, I've been in this for 2.5 years. The fundamentals, I'm not saying that there hasn't been some variability as the economy has done what it does. That's certainly been the case. But at the same time, we're talking about a company that has generally been able to hold its own. And when I posted the trade alert for Huntsman, the value proposition was there. The fundamentals were generally very, very solid. And so this is a good trade at $20. If this was a stock that you had not worked with before, you did not have a previous position in, this is one that I would have. This is one that I was very comfortable with at $20. That's certainly even more true than at 34, right? Which is the other reason I placed the trade for my own purposes to lower the cost basis. So an opportunity to bring it down to 27, that makes hopefully the recovery a little bit easier for me. And if it does pick up some momentum, if you're working with Huntsman and you're in it as well, then that's okay too. Then you get an opportunity to maximize some of those results. Let me over here really quickly just review the numbers on this one. On Huntsman, I sold the $20 strike price for 60 cents, brought in about 3% for a 2-week trade. Now, again, I'm going to be taking an assignment on this, but that's okay. This was a really nice trade in and out, just simply sitting by itself. And so the question, of course, is if you don't want to take the assignment on this with the stock almost $2 below the strike price that you sold, if you sold the same $20 strike that I did, well, you're going to be looking at here. Let's go to the details on the contract. Come on. There we go. About a 20-cent difference between the bid and the ask prices. So if I were to try to, if I wanted to minimize my potential loss here and just simply close the position, I would end up having to take a loss of about $1.15. working with just off of the basis of the asking price that we have in place. Sorry, there we go again. There's our numbers. The asking price is 175, bid is 155. Plenty of open interest and some healthy volume there. So as it is, I'm going to go ahead and take that assignment. I would prefer to be able to bring down my cost basis a little bit. But if you wanted to try to avoid the assignment, that's what it would take right now. This also begs the question: if you didn't want to take the assignment, then probably, in realistic terms, that decision was probably going to be made at an earlier stage than today. Hopefully, for example, right here around here's Friday, Thursday, Wednesday, Tuesday, Monday. Here is last Friday. It gapped down a little bit, down to a little bit below $20. That might have been the right opportunity to really think about whether or not to buy this back and close out that obligation at a more reasonable price, if that is what your objective is. All right. So that is Huntsman. Again, any comments, thoughts that you have on these, feel free to share them. Next one is another covered call. This is on a tech stock, LRCX. And I know that for some of us, this one is an interesting stock that has been causing a fair amount of intrigue over the past couple of months. Now, to be clear, I was assigned my shares on this in October at around $80, and the stock has stayed very well below that ever since. I'm just going to draw a line at 80. And it has stayed below that level throughout the past couple of months, and gapped down. In fact, yesterday below the 20-day moving average, which is my green line here at about 75. It looked like it was just kind of starting to trace along that 20-day moving average, which was kind of encouraging until this week, and now it's broken down. Now it's at 73.21. And it looks like it should have some pretty strong support right here down at this pivot low, which is at about 69. But if anything, it's working down at the bottom end of what this consolidation range looks like. Does that mean that it's going to bounce off of this level and go back above? Looks like that's what it's doing now. And so that's encouraging. But of course, it could still break down again. We'll see what happens. A lot of this is going to depend on what the market decides to do with tech stocks, which are taking kind of a beating right now. LRCX is an interesting company in the semiconductor arena, dealing primarily with fabrication and manufacturing services for semiconductor companies. So they provide the equipment for companies like NVIDIA, Intel, et cetera, to be able to produce chips. And that's one of the reasons that I like these guys. I don't mind the stock being down below my $80 strike price. Here is a dividend that we did that I excuse me, was on the record for on the 11th of December, and that is going to be paid out in the first week of January. So just holding onto the shares means that I was able to take advantage of that dividend distribution, which is nice. Okay, Barry, my LRCX 81 call expires on the 3rd of January, but he brought in $1.40. And so, sorry, I'm not going to be able to give you a tick mark because my drawing tools aren't working the way that they should, but I'll give you one in spirit. There you go. $1.40. That's, and that's nice. I brought in $1.65 for 80.50, trying to build in a little potential capital gain, and it's clearly not worked out. But that's okay. I'm going to be holding on to my shares again as it rallies. Hopefully, rallies, I should say, back up towards the $80 strike price. Then hopefully there'll be another opportunity to bring in another covered call. And you heard me in this session refer to covered calls on FMC as kind of a self-paying dividend, right? That's the reason, one of the big reasons I don't shy away from these assignments is not only for the opportunity to bring in these dividends, but to find these opportunities to take place covered call trades whenever the opportunity presents itself. Some of the people in our group will take the some of the people in our group will take the opportunity if a stock is significantly below the strike price that they've sold and possibly be in a downward trend. They may go ahead and look at selling covered calls below the strike price that they've sold. So if I'm talking about LRCX, the top of its range right now looks to be about 77.50. It's kind of contracted a little bit, but just based on these recent pivot highs, maybe let's just call it 79, just for the sake of argument. So one of the things that you could think about doing, again, this isn't a recommendation to buy or sell any security, but just kind of giving you other options to think about. This is what some of the people in our group will do, is they'll look at that and say, well, what about selling a covered call a little bit above the stock's current price? Well, here's 78, for example. The stock is down at 73. What about 75? Here's 1 month out. I could bring in 216, 255. These are all out of the money contracts. Boy, that sounds kind of nice. Here's about 2%. Here's a little over that. Here's in the neighborhood of 2.5% for 1 month. Here's 77 for 3 weeks, 76, 75, 74. So sometimes there will be there may be opportunities to consider whether or not you want to. Sorry, I did not even. So there we go. So there's some opportunities here. Here's the 78 for four weeks again. Bid price on this is $1.54. A little under 2% for 1 month, but still above 1.5. Here's the 76, $2.18, a little over 2%. 75, $2.50. 74, $3. The caveat is if you're going to sell a covered call below the strike price that you sold, you should always make sure that your intention is to be very, very active about managing the trade. My preference with these income trades, whether it's a put sale or covered call, I place the trade, I let it go through expiration. The result is the result. I'm going to live with it. That's primarily because when it comes to covered calls, I'm working with covered calls that are at or above the strike price that I was originally assigned at. So if I get called out of those, I'm okay with it. I end up either closing out the trade at the same price that I bought the stock at, which I've done several times over the past couple of months, or I end up baking in a little bit of capital gain. If you're selling covered calls below the strike price that you were assigned at, below your purchase price, then I think the mindset needs to be different. You've got to plan to manage that more effectively, because let's say that you sold a $78 strike price. Let me change my line here. But you brought it down around here, or possibly even around that 77 level, right? Because boy, those were some nice looking premiums at that price, right? Boy, those looked a lot better. Why not try to take advantage of that? There we go. Well, what if the stock suddenly experiences a significant surge in upward momentum? and you see it really suddenly rally strongly above that price before the expiration of that covered call. Now you could be called out of that stock at a lower price than what you paid for it, just because that is what the covered call contract requires. That's the terms that you're operating under. And so the expectation should be, if you see momentum picking up quickly, bullish momentum picking up quickly for a stock that you sold a covered call at a lower price than your purchase, you should plan to manage that trade very aggressively. Be ready to close it out quickly, even if it means taking a little bit of a loss on it to hold on to the stock and take advantage of hopefully what appreciation you're going to see in the stock at that point. I hope that makes sense. I've been rambling a bit, so if you have a different idea, different perspective, if you have a question about it, feel free to offer. Okay, go back here to our track record, and here is Skyworks put sale that I placed in on the 11th of December. This was last week's trade. Brought in $1.15 on this one for a 9-day trade. Feeling pretty good about this. A little bit under the 1.5% that I like to try to do each trade, but putting that in perspective against a 9-day expiration, it certainly seemed more than reasonable. So let's go ahead and check in on Skyworks and see where we sit right now. There we go. Selling the 8750. Yep. The 8750 means that with the stock pushing up here towards $90, and certainly using the 20-day moving average right now, the green line, as strong support, means that compared to Borg Warner and and Huntsman, where I'm going to be taking assignments, this one's going to be expiring worthless. It looks like, unless we see it really break down quite a lot. I don't expect that to happen. That may offer up an opportunity to keep working with the stock for next week's trade. We'll see how that goes. It just kind of depends on where things lie at that point. But this is usually the majority case of what happens. And as always, I didn't share my chart. So there we go. Stock showing very, very strong momentum, even coming off of its high point at around 91, almost $92 a couple of days ago. It's still it's bouncing higher. It looks like this could just be one of those nice little drops, bounce, and go higher. So we'll see how that works out. May or may not, I don't know, but we'll see. Okay. Well, we've got some time left, and we've gone over all of the stocks that I'm working with right now. All of the currently open trades. Um, any questions about anything else? Maybe that we've been working with, any previous stocks that maybe we're still holding from previous assignments, or stocks that you may be looking at that you'd be willing to share with the group. Even if you're not here live, this is maybe an opportunity to look at something that somebody else that is here live may be looking at after the fact. So go ahead and open this up for you a little bit and see what you might be interested in looking at. Okay. Nothing wrong with that. We can also call it a little bit early, and that's okay too. I appreciate everybody's time. Thank you for your participation as always. Looking forward to our session. We will be having a regular session next week. It is obviously Christmas is going to be midweek. That means that there is not. I'm not planning to. I'm not going to be posting a trade on Christmas Eve. That's Tuesday. So there will be no trade on next week. Also, no regular article on Wednesday, meaning that will be Christmas Day. I am going to go ahead and take the liberty of taking that off and spending it with my family. But we'll pick up normally on Thursday and then have our live stream on Friday as well. And so I will see you next Friday. If you have any questions between now and then, don't hesitate to reach out. As I've mentioned, my email, rebelincomesystem@gmail.com. Or you can reach out to me directly through the Discord server in the open discussion channel, or message me directly. Thanks, everybody. Appreciate your time. We'll see you next time. Oh, Barry, you just got it in just in time. Foot Locker, 2250 put sale expires today. Okay, let's go ahead and take a look at that one. Came in right under the gun, man. Just an interest of full disclosure, I have been working with, this is another stock that I've been working with for some time at a much higher price. Um, I've been holding through a very long downward trend. The stock has suspended dividends and struggled to recover from recover highs last seen. The ranges that I'm in are around 50, which is going all the way back to 2021. But stock is looks like it's maybe trying to stabilize a little bit and set up a new consolidation range. So let me read your numbers, Barry. You have 2250 put sale with the stock sitting at around 2279 at the current price, and picking up a little bit of bullish momentum too, as it's been rallying off of its last pivot low. Right, got it doing a little bit of this. That's positive momentum, and that's putting you in a good position on this one. So congratulations. I'll give you another figurative tick mark, even if I can't give you a literal one. So Barry's got two of them. That's nice. Thanks again, everybody. Appreciate your time. We'll see you again next week.